Hi everyone, my name is Deloshan. Welcome to another episode of Real Estate Watch. My team and I help buyers and sellers all across Toronto to make smart real estate decisions. So if you want to connect, please check out the link below or email me directly at deloshan@realestatewatch.ca. Today, I want to talk about something that's been surprising a lot of people. Why hasn't the pre-construction condo market crashed even though so many investors are defaulting at closing? Well, let's break it down. First, let's talk about how we got here. So, most of the new condos finishing constructions right now were bought about 4 to 5 years ago. And a big chunk of those buyers were investors, not end users. So, what was their plan? Buy now, flip later for a profit. Easy money, so they thought. Back then, investors were paying way more for pre construction than what similar resale condos were going for. So, for example, say a resale condo might be $1,000 per square foot, but a pre-construction unit, $1,400 per square foot. That's about 40% more than a resale. Why would somebody pay so much? Well, because they didn't intend to close on the deal. They just wanted to sell the contract before completion. So there was no mortgage, no tenant, no headache. Now, fast forward to 2025. Those condos are finishing, but the resale value of those condos are less than what investors paid for. So imagine you've paid $1 million for a 600 square foot condo in Toronto. Now it's only worth $700,000. That's a $300,000 gap. So what banks do is they send an appraiser and they say the unit is worth less than what they paid for. Normally, you, the investor, would have to cover the difference. Even if you had already put $200,000 in deposit, you still owe $100,000 or more to close the deal. But here's the twist. Some banks have been using what's called blanket appraisals. Basically, what it is they're pretending the condo is still worth $1 million, even though the appraiser says it's not. So that way, you can still lend the investor a big mortgage, say $800,000, and close the deal. Now, this works only when the gap is small. But now that some of the condos are about 25 to 30% down in value, the trick doesn't work anymore. So as a result, most investors are walking away because they can't or won't be able to close. So they're defaulting. So with all this going on, why hasn't the condo market crashed? Because wealthy investors and corporations are buying them up quietly behind the scenes. They're buying up entire floors and blocks of units directly from the builders. So they're getting a major discount when they do that. So think of it like this. The mom and pop investors are failing, and this is where the big money is stepping in. These deals aren't showing up on the MLS. You can't track them on House Sigma or online. These are private deals behind closed doors. So what's the takeaway? The condo market is being bought up quietly by the deep-pocketed investors. Yes, there are some mom and pop investors who are in trouble. Yes, there are some projects that may still fail, but it's unlikely that we'll see a widespread collapse like we saw in the US during the 2008 financial crisis. Why, you may ask? Because there's still a lot of capital out there that's ready to be deployed. And there's a strong incentive from banks, developers, and even the government to keep the condo market pretty stable. So if you're wondering why the market still feels off, this is a big part of the reason. The problems are real, but the solutions are mostly happening behind closed doors. So if you found this helpful, give it a thumbs up and don't forget to subscribe. If you got questions, drop them in the comment or email me at deloshan@realestatewatch.ca. Thanks for watching and see you in the next video.